More than 7% rally. We like the forecast?
Well, so clearly the data center was the focus, and they did quite well. Although it was below consensus, the guidance suggests the data center spend will hold up. And remember, data center is directly tied to the enterprise tech spending and their CapEx spend. If all the cloud providers are investing, in building more cloud capacity, a lot of that spending is going towards Nvidia's data center spend. And I think that's where market is excited that, you're not seeing that sort of inventory correction we see on the PC side with Intel, cutting their forecasts. That's not the case with enterprise chips. And so far, enterprise tech spending has held up across the board, even when it comes to, software side. And that's what you see on the chip side as well. So
when I think data centers, I think artificial intelligence. I look at the statement, and it says AI is at an inflection point, setting up for broad adoption, reaching into every industry. How much is Nvidia set to benefit?
Well, so they are the leaders when it comes to developing these chips for, whether it's for ChatGPT or for automotive or anything that has to do with, parallel processing, a GPU type of chip. You can find a lot of use cases, and that's what they've done well in terms of diversifying that top line. I think Intel's biggest problem is the fact that they were never able to go beyond PCs. Guess what? Nvidia has done that very well, and they're able to find these new use cases for their GPU chips. Even the gaming segment actually did better than expected. Yes, it declined, but you can see once the market has a cyclical rebound, they're positioned very well on the gaming side. So that's why you see that stock reaction. Although I don't know if Nvidia should be trading at 5 times market cap of Intel, even though Intel's revenue is 2 times bigger. So time will tell if valuation could be an issue.
Don't question valuations, Mandeep. But notable that Intel today, the news was the slashing of the dividend at a time that we are worried about boom-bust cycles. Anything in Nvidia that caused you cause for concern?
Well, so one is gross margins is very important. This quarter, they went back to mid 60%. Anytime you see a chip company trading at mid 60% gross margin, I'm worried because guess what? As a sector, chip sector doesn't command those high gross margins, those high ASPs. Over time, it gets commoditized, other players catch up, and it's very hard for a chip company to sustain those kind of gross margins without layering on software, which is what Nvidia's play is. They want more software on their chips.
Interestingly, we've got breaking news coming from the call. The CFO currently saying that Nvidia saw orders pause as a timing issue. This is to do with the cloud service providers pausing orders in the fourth quarter. What does that signal to you? That
is direct CapEx spend from the cloud providers. So, and that's the other risk with Nvidia is the customer concentration. A lot of that data center revenue, which is a $15 billion run rate, is driven by these hyperscalers, which are 4 or 5 customers. They're the ones who are building cloud capacity. And we all expect a digestion phase when it comes to cloud spending. It's not as if it's not going to come back. But because these companies have been spending, CapEx growing at elevated levels, there will be a pause. And it could be a 2-quarter pause. It could be 4 quarters. I think that's where they're talking about probably order growth slowing.